Good morning and welcome to this Moneycontrol live stream. You're watching Opening Bell with me, Nandita Khemka from the Mumbai studios. And of course, monsoons have arrived early. It's a pretty rainy day here in Mumbai as well. Monsoon has hit Kerala 8 days in advance. So it's the earliest monsoon arrival in the last 16 years. Aside of that, if you look at the global cues also, they're looking pretty positive. US futures are trading with strong gains of 1%. Also, despite the fact that we saw a weak close on Friday for Wall Street, amid a flip-flop from Trump when it comes to tariffs. But this morning, there's some good news on the tariff front as well. Trump has delayed the EU tariff deadline, so to say, by 8 days to July 9th. So, yes, that's something that is being cheered by global markets. Asian markets also in fine fettle. The GIFT Nifty is also hinting at a positive start. Mind you, on Friday, we saw a good resurgence by the bulls. We saw a 1% gain on the Nifty, but for the week, markets were on the back foot last week. FII buying also resumed on Friday, but whether or not it continues or not, we'll have to see that, because for the week last week we saw FIIs pull out in excess of 10,000 crore rupees from the Indian markets. So lots to digest. We have a lot of stocks as well to watch out for. The likes of Glenmark will be in focus. It has missed its FY25 guidance. That stock will be in focus. You have Tata Motors on the back of the EU tariff deadline. That stock will be in focus. A lot of other results also came out of the weekend. Likes of NTPC, JSW Steel, all of those stocks will also be in focus. Also, your stock related queries will be taken up on the show. So if you have any queries, keep them coming in on a live feed. We'll try and get them addressed by a technical expert on the show as well. But before we move any further, quickly take a look at the top stories at this hour. US futures surge after Donald Trump delays EU tariffs to July 9th. This comes after a fall in Friday's session, with the Dow Jones ending over 0.5% lower and the Nasdaq falling 1%. In fact, even the S&P 500 turning negative once again for 2025. Asian markets rise as sentiment picks up on Trump's EU tariff deadline extension. The Nikkei and Kospi trade higher by 0.5% or so, while the GIFT Nifty indicates a higher start for our markets as well. US President Donald Trump condemns Russian president's decision to unleash one of the largest offensives in Russia's war against Ukraine and said he was considering imposing more sanctions on Russia in response. The RBI declared a record dividend of 2.69 lakh crore rupees for FY25. This is 27% above last year's dividend. The RBI has also hiked the contingency risk buffer from the previous range of 5.5% to 6.5% to 4.5% to 7.5% of RBI's balance sheet. And monsoon arrives 8 days early, marking the earliest arrival in 16 years. The IMD has forecast light to moderate rainfall over Mumbai and suburban areas as well. Well, pretty rainy day here in Mumbai, and we are hoping for it to rain gains on the last street as well. Hopefully, we could see the 25,000 level being reclaimed by the Nifty in today's session. But taking you through the weekly market action, both Sensex and Nifty were down nearly 1% each last week. 35 Nifty stocks ended with losses for the entire week. Grasim, Maruti, M&M, Eternal, Sun Pharma, these were some of the top losers. Eternal will also be in focus on the back of weight reduction in MSCI. We will take stock of this particular stock as well as we progress through the show. But BEL, HDFC Life, Tata Steel, Bajaj Auto, Jio Financial, these were some of the top gainers for last week. And if you look at stocks like Strides Pharma, Delivery, Angel One, these were some of the top mid-cap movers for last week. Particularly speaking for Friday, we saw indices, clocking in gains of nearly 1%. It was a good up move. The Sensex rose over 750 points, to hit 81,700 mark. The Nifty as well ended higher by nearly 250 points. So it managed to close above that 24,853 mark. We will talk about the levels to watch out for over the next couple of days. But 24,850 is back on the charts for the Nifty. On Friday, we had 48 out of 50 Nifty stocks closing in the green, and the advanced decline ratio was also pretty strong at 2:1 on NSE. So mid caps also saw good traction. FMCG and IT were among the top gainers. IT in fact recovered pretty smartly from the previous days or Thursday's losses. Except pharma, all the sectoral indices ended in the green on Friday. In terms of fund flows as well, foreign investors turn net buyers once again. They have turned net sellers, recently. In fact, we had Moody's downgrading US ratings as well. Post that, we saw FIIs withdrawing some money from the Indian market. But on Friday, the net buy figure stood at somewhere around 1800 crore rupees in the cash markets. Domestic investors, the buy figure was pretty meager, but they bought shares worth 300 crore rupees. In equities in the cash markets. The Nifty put call ratio jumped to 1.09 vis-a-vis 0.94 in the previous session. Talking about stocks that will be in the F&O band today, new additions in the form of Chambal Fertilizer and Hindustan Copper. The stocks that will continue to remain in band today would be the likes of Dixon Technologies, Manappuram Finance, RBL Bank and Titagarh Railways. On that note, let me figure out if our technical expert is ready to join us on the show. Rajesh Palviya, Senior Vice President Research, Head Technical and Derivatives at Axis Securities. Rajesh, if you can hear me, hope you're doing well. It's a rainy morning out here in Mumbai. Do you expect the Nifty to build on Friday's gains? We saw 24,850 back on the charts. Any chances of 25,000 being reclaimed today?
Good morning, Nandita. So, yes, the continuity of uptrend would be there in the market as broader market is showing strength, and Nifty managed to hold about 20-day moving average in the brief corrective action which we have witnessed in the previous week. So I think till Nifty is holding about 24,800, yes, there is a possibility that, ahead of this May series expiry, we may, able to, cross 25,000 level. And if at all this happens before expiry, I think we may see a short covering action, and possible rally can extend to 25,200 level also. So 25,000 is the immediate level on the higher side based on the call concentration area. And looking at the market breadth, we believe that, yes, there is a high possibility that, Nifty will attempt to cross 25,000 level. So at this juncture, buy on dips should be your strategy. 24,750 should be your stop loss to buy and accumulate the Nifty and to hold your long position for upside target of 25,000. For Bank Nifty, again, here also structure is looking very attractive. Bank Nifty is now negotiating with its multiple supply zone, which is placed at around 55,600 zone. If at all Bank Nifty manages to cross 55,600, I think here also we could witness a short covering action, and then possible rally can extend to 56,000, even 56,200. Possible new all-time high is on the card for Bank Nifty very soon. So here also setup is bullish. 55,000 is the immediate support area. One should keep a stop loss of 54,800 to hold their long position, and we are expecting that Bank Nifty is ready to hit new all-time high trajectory very soon in the coming days. So here also we are holding bullish view.
Okay, bullish view on the Nifty Bank, but the Nifty Bank had taken a pause. But once again, the chart structure looking attractive, and it is expected to hit new highs according to Rajesh as well. But one stock, that will be in focus, stock of the day, so to say, is Glenmark today. The stock has been sideways over the last month or so, and you haven't really seen any big trends emerging on the charts. But the company has reported, weak set of numbers. It has missed its FY25 guidance as well. It is expected to open lower. In fact, in the pre-open, it's down somewhere around 4% or so. Just looking at what Nomura has said, it has a neutral rating, target price at 1,500 rupees per share. It has taken note of the fact that the company has missed its expectations when it comes to fourth quarter numbers, missed FY25 guidance. There was an exceptional loss of 370 crore rupees, and that is something that impacted the net earnings significantly in the fourth quarter. Ex-Europe, all the other segments, according to Nomura, revenue in all the other segments have been lower than expectations. India revenue growth has been at 0.4% on a YY basis, which is much below peers as well. And weak seasonal demand for respiratory products impacted the India business. And I think the company did mention in the con call as well. It has pointed out that FY26 guidance is expected in the range of, I think, when it comes to revenue, it's in the range of 10 to 12% and margins in the range of 19 to 20%. That's for FY26 the company has outlined. But looking at the charts, as I mentioned, no clear trend. 1370, I think that's where the stock is right now. Would you see renewed selling pressure after today? How are you reading into the charts of a Glenmark?
So, Nandita, the critical and the important support area for this decline would be at around 1360, 1370 zone. If further follow-up selling comes in this stock below 1360, yes, there could be another cut. There could be chances of another cut towards 1320 level also. As structure is still on the sideways zone, but if it's opening around 1370, then it will be breakdown of 20-day moving average support area, and it's a breakdown of multiple support zone on the near term chart. So below 1360, yes, there is a possibility of further more sell off to 1320 level on the downside. Until the stock not crosses above 1435, 1440 zone, trend is likely to exhibit on the bearish side. So wait for decline to settle down at certain level. At this juncture, I would suggest to avoid as the stock is breaking below to its important support area in the opening tick.
Okay, that's the view on Glenmark. 1360, 1370 crucial level to watch out for on a Glenmark. But we are just about looking at the first ticks trickling in for the market. There goes the opening bell. We are 100 points higher on the Nifty, 24,950. We've cleared that level for now, inching towards 25,000. Not very far, 25 points out now. Sensex as well above 82,000 level, a 400-point uptake. The mid-cap index moving in tandem with benchmarks, no outperformance from the broader market as we speak. It's a 0.5% up move on the Nifty mid-cap index as well. The Nifty bank index above 55,600 as well. The advanced decline ratio as of now looking pretty strong. Early days to comment, but 3:1, that's the NSE advanced decline ratio. Just want to take a look at what the sectors are up to this morning. We had all the sectors ending in the green, barring the pharma pack on Friday. Today, as I mentioned about the Nifty bank index, it is a good uptick of 0.5%, but when it comes to other sectors, it is green across the screen. Autos up 0.5%, FMCG up 0.5%, IT extending gains 0.5% up there as well. Metal pack up 0.6%. Pharma index showing strength today, 1% gain on the pharma index. In fact, that is the outperforming index this morning, the pharma index, buying coming in at lower levels. All the other sectors like oil and gas, you have realty pack, all of the sectors doing well. Even the PSU banking lot is up somewhere around 0.5% or thereabouts. In terms of individual movers, then reacting to its numbers would be NTPC. That stock would be in focus. It's up over 1.5%. You have Power Grid as well, up almost 2%. M&M up 1.5%. Hindalco up 1%. Grasim, JSW Steel also reported numbers, steady set, and then the reaction is pretty much evident on the stock as well. Grasim, ICICI Bank, Tata Motors, 1% higher for that stock, Tech Mahindra, ONGC. So yes, across the board, we are witnessing gains from metals, FMCG, power companies, even banks like ICICI Bank are doing well. That particular counter is up in excess of 1%. If you look at the losers, then there's only one laggard, that's Eternal. That stock is down 3.5%. Of course, weight adjustments would take place this week. And MSCI and FTSE, they have announced weight reduction in their indices for this particular stock, and there will be outflows, which is why the stock is down 3.5% or so. Before we talk about other stocks, Rajesh, let's talk about Eternal then. Both MSCI and FTSE have announced weight reduction in indices. This follows a reduction in foreign ownership limit, from 100% to 49.5%. The FTSE weight reduction, according to IIFL Capital, would lead to outflows to the tune of $380 million. And for MSCI weight reduction, there could be an outflow of $460 million or thereabouts on the 30th of May when the changes happen later this week. But Eternal, how is this particular stock looking to you on the charts? I think last week, one of the days, it saw a good up move. It's down 3.5% today at 228. What would you do with the stock?
Yeah, stock is witnessing some profit taking at higher level, and now stock is slipped below to 20-day moving average. Looking at the near term structure, I think the next important support area for this corrective move is placed at around 220 to 220 zone. So I think that level needs to watch closely. If at all stock breaks below 220, then we may see furthermore follow up selling. But 220 is likely to act as a good support area as looking at the near term, short term structure. I think stock is having multiple support zone around 220 to 220 zone. So I think around, if stocks comes around those level, one should review the structure again. And if at all stocks holds this level 220 level, so I think some pullback action again we may see in the stock towards 235 to 40 zone. So wait for this correction to settle down around the support level, then again one should review the structure again for eternal.
Okay, that's the view on eternal then. But two stocks that should be in focus, or that are in focus rather, are the likes of NTPC and JSW Steel. Both the companies reported numbers. For NTPC, the stock per se hasn't seen any good up moves. In the last 1 month, we've seen the stock lose somewhere around 3%. In the last 5 days, the stock has barely done anything. It was down somewhere around 0.5% or thereabouts. In terms of its numbers, profits grew around 22% or so, and revenues were up 6% on a sequential basis. They were, the profit was mildly below estimates. Margins have also come in lower at 25.5% vis-a-vis 28.9% on a sequential basis. Just going through a brokerage report, Motilal Oswal has said that it sees limited upside amid sluggish capacity growth. But looking at the stock structure, the chart structure, which way is it headed? It has been pretty much sideways in the last 5-6 sessions.
Nandita, stock name, please.
NTPC.
Yeah. Okay. So, if we analyze the overall structure for NTPC, yes, it is very much sideways behavior since last couple of week. But looking at the near-term structure, stock is almost trading near to its 20-day, 50-day moving average support area. On the daily chart, stock managed to give breakout of its contracting triangle and holding above the breakout level. So, but yes, it's a low beta stock, so it's a very slow mover category of stock. Looking at the structure, till stock is holding above 344 level, I think trend is likely to exhibit on the bullish side, and possible follow-up buying action can be there in this counter. So we are holding our bullish view based on the technical structure. 344 needs to keep as a stop loss. On the higher side, once stock crosses above 351, I think some buying action may emerge in this counter, and then possible really towards 356, 358 would be there. So with stop loss of 344, one can hold the position as the structure is still on the bullish side for the near term.
What about JSW Steel? That stock is also in focus. The company reported numbers, pretty much in line kind of operating performance. The stock has staged a good comeback from April lows. The stock is up 9%. Profits were up 13.5% on a year-on-year basis. They were above expectations. Revenue, however, was down 3%, and that was below estimates. The stock will also be in focus given the fact that the Supreme Court will be hearing its plea on the Bhushan Power liquidation today. In fact, the review petition on the liquidation of Bhushan Power will be heard by the apex court. The company is seeking a review of the 2nd May order of the Supreme Court, which rejected the 19,300 crore rupee resolution plan. As I said, the stock has seen a good up move. If you look at the kind of performance it has seen from its April lows. Would you expect the stock to build on these gains, and should one add on more positions?
So looking at the structure for JSW Steel, still it's in consolidation, but near-term, short-term structure are still on the bullish side. So I think looking at the chart structure on the weekly chart, once stock crosses about 1045, I think here there could be a chances of follow-up rally to continue. At this juncture, yes, one can hold on, and in the decline, one can add the position as overall structure is bullish. Series of higher top, higher bottom formation is there. So I think above 1045, there could be a chances of rally to extend towards 1100, 1120 kind of zone. So in the decline, one can buy and accumulate. Stop loss should be placed at around 970 to, buy and accumulate this counter.
Okay, that's the view on JSW Steel. But another stock that's in focus and that's hogging the limelight today is JK Cement, up 6.5%. Numbers came out pretty strong, 77% uptick in net profit. Revenues rose for almost 14%. Margins also higher in excess of 20% at 22% vis-a-vis 18.6% on a year-on-year basis. The stock has gained 20% in the last 3 months. In the last month or so, the ride has been fairly choppy, but the stock was listless in the last 5 sessions. Today's up move, does it signal a resumption of the kind of gains it has seen in the last 3 months, JK Cement?
So continuity of uptrend is there. Series of higher top, higher bottom formation is there on the weekly as well as on the daily chart. It clearly indicates that there is a sustained buying action is taking place in this counter. In the cement space, this stock is almost trading near to its all-time high trajectory. So I think yes, there is a possibility that if this continuation of uptrend is likely to be there. After today's up move, stock managed to give breakout of its previous swing high of around 5320 kind of zone. So I think if it's sustained above 5320, another target towards 5550 would be there in the near term to short term perspective. So I think one can hold the position with stop loss of 5320.
Hold with the stop loss of 5320 for a JK Cement. But there is this stock GE Vernova T&D India reacting to its numbers. The stock is up 10% today. And over the last 1 month, it's been up 35%. Would you ride this momentum that it has seen over the last one month? It's at 2073 at the current juncture, and the 52-week high is 2243 for the stock.
Which stock? GE?
GE Vernova T&D India. If you track this stock.
No, I don't track this stock actively. I'll try to find out the stock ticker.
No worries, no worries. Rajesh will come back to it. But let's shift focus to some viewer queries
Nandita, I got it.
that are trickling in this morning. Okay, sure. Please go on. Yes, please go on.
Yeah, so stock has shown a gap up opening, and now stock is almost locked at 10% on the NSE. So I think looking at the near-term, short-term structure, I think there is a clear breakout on the near-term chart. So I think if its stocks continues to hold about 2040 now, I think another round of rally would be there, and maybe we could see stock to again surpass its previous swing high or all-time high trajectory of 2240 kind of zone. So very strong buying action has been taken place in last couple of weeks. Stock is moving in upsloping channel on the weekly chart. So I think yes, one can hold the position with 2040 as a stop loss. Target towards 2150, 2200 would be there.
Okay, that's about GE Vernova is clearly reacting to its numbers. The stock is up 10% as we speak. But let's quickly shift gears and take stock of all the queries that are trickling in this morning from our viewers. I would like to take up the first one on CDSL. This one's coming in from Amit Kumar Srivastav, and he is already holding this stock. He has purchased 1,000 shares at the rate of 1270 rupees per share. The stock is at 1476 today. He's making a fairly good profit here, but of course the stock has seen a good correction from its 52-week high. Would you advise him to hold on, Rajesh?
I think yes, one should hold the position as whole capital market related theme is doing good, and the way CDSL has moved up in last couple of weeks and holding about to all its near-term, short-term moving averages. I think there is a possibility that stock will resume its uptrend, and then possible target in short-term towards 1550 to 1600 would be there. So hold the position with stop loss of 1440 for CDSL.
Okay, hold is the call here. Hope you've taken note of the levels that were mentioned by Rajesh. But let's shift focus to the next query then. This one is on Petronet LNG. This one's coming in from Satya CK. He wants to know if it's looking good to invest for the long term, and he wants to know the levels to invest in and the medium to long term targets on this particular stock. The stock has seen a steady up move. I was just going through the 1 month chart, and even the last 5 days have been fairly okayish. At 321, would you advise a buy now or would you wait for some dips?
I think overall structure is looking bullish for near term to short term. Stock is now negotiating with its multiple supply zone, which is placed at around 325, 326 zone. If the stock manages to cross 326 on a weekly closing basis, yes, there could be a possibility that stock can continue furthermore upside towards 340 zone. So I think one can hold the position as the stock is comfortably holding about 20-day moving average. 316 should be your stop loss to buy and hold the position for Petronet.
Okay, that's the view. Hope that answers your query, Satya. Let's shift focus to the next one then. The next one's coming in from Debu K. He wants to know whether Bharat Bijli is looking good for an investment in the current scenario. He's not really mentioned his time horizon, but since he says investment, I'm guessing it's for the long term. Considering 1 to 2 years, is it a good time to take a position in Bharat Bijli?
So stock after a correction, stock is consolidating at lower band of this corrective move. Looking at the weekly chart since last 4-5 week, stock is moving in very narrow price range. If at all stock crosses about 3120, 3150 zone, then there would be a breakout on the weekly chart for this consolidation. So I think if you are looking this stock for investment perspective, you can buy and accumulate as stock is available at attractive price point. On the long term chart, stock is holding on the monthly chart as at around 3000 level. So if it continues to trade above 3000-2970 zone, I think one can buy and accumulate this stock with stop loss of 2950. On the higher side, once the stock crosses about 3150, one can add more position and then possible target towards 3500 would be there on the stock.
Okay, that's the view on a Bharat Bijli. I hope that answers your query, Debu. But let's move on to the next one then. This one's coming in from Naveen and he wants to know your thoughts on a BHEL. The stock has seen a good uptrend. In the last 1 month, it has given double-digit returns of 12%. Last week also was pretty much good for the stock. It was up somewhere around 6 to 7%. Are you seeing a fresh breakout on the charts now? It's at 258, but it still has quite a lot of ground to cover if you compare it with the 52-week high of 335. Any chances of 300 being retested in the near future?
Definitely. So stock is holding the strength. Very strong setup on the near term as well as on the short term chart. Series of higher top, higher bottom formation. Looking at the near term, short term structure, yes, if stocks continues to hold about 350 250 mark. Another round of rally towards 285 to 290 would be there. So yes, one can remain invested in this counter, and we believe that there could be another rally in the counter in the near term to short term perspective. Keep stop loss of 250 to hold the position.
Keep a stop loss of 250. That's the view here on a BHEL. But let's then talk about some hospital stocks. There's a query that has come in from Rupak Mehta. He wants to know of some good mid-cap to small-cap kind of hospital stocks for investment purpose. Anything that you like within this universe, Rajesh?
I think from hospital space, there are a couple of stocks where we are bullish. Max Health, we like from that space, and we believe that the way stock is holding near to its multiple supply zone. I think there is a possibility that Max Health may manage to give breakout above 1190 1200 zone, and once that breakout happen, the next target for Max Health would be around 1300 to 1350. So one can buy and accumulate this counter with stop loss of 1145. Fortis is also looking attractive, and we expect that this stock may also exhibit a good amount of rally in the near term to short term perspective. So one can buy and accumulate Fortis also with stop loss of 675. On the higher side, we are projecting target towards 780 to 820.
Okay, those were some of the hospital stocks where you can take a position. Hope that answers your query, Rupak. By the way, we have only built on the gains that we saw at open. In fact, it's good to be back on a day when the Nifty has reclaimed that 25,000 mark. It's a good 200 point up move on the index. Sensex up over 600 points. The mid cap index has also gained traction. So all round cheer. As we saw at the open, all the sectors were trading in the green, led by the pharma pack. And barring 3-4 counters, most of the stocks are trading in the green on the Nifty. Some of the stocks like HDFC Life, SBI Life, Bharat Electronics, Eternal, and these are some of the stocks that are sitting out of this up move. But aside, if you ignore these stocks, you're seeing a good up move in the market today, almost a % kind of a gain on the Nifty. 25,000 back on the screens. But BEL sulking in trade today, and I spotted a query on BEL, on our feed. Didn't quite get the name of the gentleman here, but he wants your thoughts on BEL. I think last week one of the brokerages upgraded the stock. The stock did see some bit of traction, but today it's not doing all that well. Bharat Electronics, given the fact that defense stocks have seen a good resurgence, how does this particular stock, stack up on the charts?
So I think defense stocks should be keep on a buying list as overall structure for most of the defense stocks are on the bullish side, and we believe that after a brief corrective move, most of the stocks should resume again uptrend. So I think from defense tech, one can focus on so many stocks are available that after a mild profit taking which is happening in the most of the stocks. So BL we are bullish. Stock is almost trading near to all-time high trajectory. If you get opportunity again, to buy this stock around 375, 370 zone is again, attractive level to buy this stock for near-term perspective. Your stop loss should be placed at around 365, and we believe that again there would be a resumption of uptrend, and a possible target towards 425 to 430 would be there for BL. And another, so many stocks, almost most of the stocks are, showing same kind of behavior from the defense space. So you can focus on the stocks where the, breakouts are intact on the near term to short term perspective. So those stocks can be looked at in this correction, and one can buy and accumulate the stocks from the defense space. And we believe that, rally would be, another rally would be there in the most of the defense stocks.
Okay, yes, renewed momentum in defense stocks. In fact, BEL hit a fresh high last week, and just some bit of profit taking kicking in today. I hope that answers your query. But I did spot a query on Ashok Leyland as well on our feed. I think Geetu Sandesh has written in, and there is a downgrade that has come in on Ashok Leyland from HSBC. They have downgraded the counter to hold, and the target price, however, has been raised to 260 rupees or so. On the other hand, you have Nomura that has a buy call, and the target price here is at 275 rupees per share. The stock is trading lower by 0.5% or so. Which way do you think the stock is going to head from here? And is it a good time to buy Ashok Leyland?
Definitely. So, very strong, price action we have witnessed in this counter series of higher top, higher bottom formation on monthly as well as on the weekly chart, which clearly shows that, long-term trend is very much intact on the bullish side. So, Ashok Leyland, yes, one can buy and accumulate this counter. Your stop loss should be placed at around 226. On the higher side, we believe that, till stock is up, trading about 226, there is a possibility that, we could see higher target towards 275 to 290 kind of zone on a positional perspective. So yes, Ashok Leyland is buy for positional perspective.
Okay, Ashok Leyland, a buy call here. Geetu, I hope that answers your query. Since we are taking up all the queries today, there are two more queries on our feed, and I want to quickly squeeze them in as well, Rajesh, before I thank you for the day. RG wants to know your thoughts on L&T Finance. He wants to know whether 170 looks like a good support level on the stock, and what is the next target. That's L&T Finance for you. And I know we discussed the capital market theme, but what would you do with the BSC, Kalp Paruksha wants to know your thoughts on BSC. So these two stocks quickly before I ask you your picks.
So L&T Finance is again looking attractive. Banking and financial theme is likely to exhibit on the bullish side, and I think L&T Finance is now negotiating with its previous swing high. So looking at near-term, short-term structure, I think any move above 178 can take this stock further higher to 186 to 188 zone. So one can hold the position if you are already in the trade with stop loss of 172. For BSC, view is bullish. There is some corrective move, but looking at the near-term, short-term, long-term structure, stock is holding the strength. Stock is continuously moving in higher top, higher bottom formation. I think one needs to keep stop loss of 2460 for their trading bets. We believe that, till stock is holding about 2460, there is a possibility of another round of rally towards 2600 to 2650 for BSC.
Okay, this wraps up our query segment for today, and we've managed to cover all the queries that were there on our feed today. So viewers, keep your queries coming in. We will try and get them addressed if we have time, for sure. But Rajesh, before I let you go, your recommendations for the next couple of days as we head towards monthly expiry?
So there are some positional picks where we are focusing, as I mentioned, about the defense as a theme. So one can look at the Apollo Microsystem. We have witnessed some corrective move in the previous day, but looking at the near-term, short-term structure, stock is trading near to its important support area, and stock is giving you again opportunity to buy stock at lower level. So we believe that once stock crosses above 144, there could be a higher target towards 165 to 170 for Apollo Microsystem on a positional perspective. Keep your stop loss around 130 to buy this stock. Astral is also looking attractive. The way stock has formed a base at lower level, and now stock is comfortably holding above 50-day, 100-day moving average. So Astral can extend its gain, and possible target towards 1550 we can see on a positional perspective. So one can buy this stock with stop loss of 1450. Cyient is also looking bullish. On a weekly chart, there is a breakout of falling trend line. Breakout indicates that we could see follow-up buying action. 1400 to 1420 would be the next target. Keep stop loss around 1310 to buy Cyient also.
Okay, Astral, Cyient and Apollo Microsystems, your recommendations, positional plays coming in from Rajesh. With that, Rajesh, would like to thank you for taking out time and joining in. Wish you a happy trading day. It's a rainy day and it's raining gains on the last street as well, so no reason to complain this Monday morning. Thank you, Rajesh, for taking out time and joining in. Well, on that note, of course, above that 25,000 mark, mid caps as well, moving in tandem with the benchmarks, the Bank Nifty showing traction, Pharma Index doing well, and all the other indices as well participating in today's up move. But on that note, let me bring on board our next guest for today. Joining me, Siddarth Bhamre, Institutional Research Head, Asit Mehta, Investment Intermediates. Sid, always a pleasure chatting, and more so today, 25,000 back on the charts, a good triple-digit move on the index. It's a rainy day here in Mumbai, raining gains on the Lal Street. It's a good start to the week. How are you feeling about the market? Last time, I would like to mention, last time when we spoke, we were sub 24,000, and today we are back above that 25,000 mark. We had a lot of issues to contend with. We had escalation with Pakistan. We had FIIs turning net sellers, what have you, and Trump tantrums as well. But now we have climbed all those walls of worry. So how are you feeling about the market?
Good morning, Nandita. Always pleasure to be on your show, and welcome back to the markets. At 25,000, we have seen a good bounce back from lower levels. But then I think this bounce back has been mainly news driven. The news which took us down in form of tariff war, or in between we fell for 2 days because of what was happening, what was termed as war between India and Pakistan. But then we fell around 2%. We gained much more than what we fell. And also there was ease of, or there was a pause which was seen from President Trump of 90 days on tariffs, which led to this entire bounce back. It's good that, markets have climbed all these walls of worry, as you have stated. But my question over here is that if we were already in midst of slowdown before this tariff war started, before these warlike situations emerged. I think these two situations have not done any good to economy at large, and that is getting reflected in earnings as well. We have seen that the expectations for Q4 FY25, Nandita, was very low. And despite that, some of the stocks have, or some of the sectors have not done pretty good. Some of the sectors or some of the stocks have done well on the bottom line front because of enhancement in margin, or probably one-time income or decline in tax rates, effective tax rates. But the top line growth overall has been quite muted. And I believe from here on, it would be very stock specific, sector specific moves which we have to keep eye on. Don't expect market to continue to rally, which it had done, in last 1 month or so.
Okay, but in terms of earnings, then you spoke about how expectations were already low, and on the top line front, we continue to see sluggishness. But anything that really stood out, now we are at the fag end of the earnings season. Anything that I think we spoke about banks, we spoke about IT. But aside of these pockets, anything that really stood out for you this earnings season, which has the potential to have a good FY26? If yes, which were those pockets?
No sector per se as such, but within sectors we have seen different stocks giving different way. So banking also, if we start, the HDFC Bank, ICICI Bank did well, but we cannot say same for Kotak or IndusInd Bank. Results were not up to the marks. Even in life insurance space, which we track closely, we saw HDFC Life, Pro Life doing well, but SBI Life didn't do well. In paint space, we had Asian Paints and Kansai disappointing, but numbers of Indigo were much better than what we expected. So I think it is not a particular sector, but within sector we are seeing stocks, some companies doing well, some companies not doing so well, and even those who are doing well have been doing well on back of cost controls or margin enhancement. Case in point, in FMCG space, we have seen some of the companies doing well because of raw material cost pressure reducing, which led to higher profitability. But if you look at top line growth, that has been quite meager. So if somebody has to see the actual growth in terms of volumes and look at the kind of valuation these companies are trading in, it's very difficult to make a valuation perspective buy. But the liquidity is strong, markets are doing great, and there is re-ratings which is happening on back of liquidity than earnings. So I believe this market will have probably a limited upside from current levels, but at the same time, the way liquidity is coming in, the way growth is happening, and the way you don't have much of other options to invest in, you won't see significant downside also. So my best case scenario for this market is, Nandita, that it is going to be great time for fund managers, because what happens that when market rises, it is very difficult to outperform market. But when market is in a range and when you have to pick and choose stuff which is going to do well within sector, that is where fund managers would shine. So this is going to be a great period of 2-3 quarters at least, where money managers can do well compared to market.
Okay, but I think key takeaway is upside is limited, but even the downside is limited. But let's talk about the foreign inflows as well, right? It has turned choppy. They did make a comeback, but again last week they turned into net sellers. Then again we saw some bit of buying coming in on Friday. Of course, a lot has to do with how the US yields are also behaving. After the Moody's downgrade, of course, yields also went up. That could have led to some outflows as well. But for the long term, what's the outlook? Because India is among the fastest growing economies. It has already become the 4th largest economy, as it has overtaken Japan. It is expected to overtake Germany soon as well. So structural story remains in place. But for the short term, how do you see the flows picture panning out?
Clearly, Nandita, long term, it's no brainer that you have to be invested in India. And people like you, me, and all other experts, we just try to make sense of what's going to happen in near term in India. Long term, the story is bullish. So if I have to read FIs, what they have been doing from medium term perspective, I think it's very important, as you mentioned one parameter, which is bond yields, 10-year bond yields, which is going higher, which makes risk-adjusted return more attractive to being in US debt rather than being in emerging market equities. The other factor which we need to consider is what's happening to currency, dollar index. So last time we saw, a few months back, dollar index hit low of 99, and then market rebound from there. Dollar index also came back to 101, and we are sub 99 again. So that also suggests that we may not see immediate inflow of liquidity from FIs. And if it dollar index continues to remain below 99 and probably move towards 97, 96, which is the case which we are expecting, we might see FIs again restraining themselves investing in emerging markets immediately. So I'm not expecting from a near term strong FIs flow.
Okay, but the good thing is that the domestic investors have been buyers and they are providing that much needed support to the Indian market. But another key factor that one needs to discuss is the monsoon factor. It has arrived earlier than usual, earliest arrival in 16 years, so to say. With this in mind, do you think it's the right time to pivot towards rural focused themes? If yes, which stocks or sectors from the rural pocket stand out to you right now?
To be honest, Nandita, this rural theme, market is slaying this theme since last 2, 3 quarters, because everybody was talking about that how the consumption in rural economy is doing well, and in fact there is problem with urban consumption. Even if you look at credit offtake, we are seeing that happening more in rural compared to urban. Overall, I think this theme has played out. Will it continue to play more? As you mentioned that, and we are witnessing that monsoons have arrived early, too easy to, say from a larger perspective, from bird eye perspective, but we will have to, get into details of stocks, that which stocks have run up, which stocks are, valued at right price. You guys were talking about defense sometime back. Everybody is bullish on defense now because there's war-like situation everywhere. But we also have to see what is the capacity, how much, companies can execute. There are companies with almost 24,000 crores of order book, but their top lines are for around 4,000, 5,000 crores. So you can't just see the order book and start getting excited. You also have to see execution capabilities. I think overall, whether it's rural theme, whether it's some other theme, we need to of course macro factors, big factors like monsoon do give fillip. But if you don't get down into stock-specific understanding, you might end up making a wrong choice in terms of buying at higher valuation.
Any ideas in terms of sectors when it comes to sectors or stocks for that matter? If somebody wants to look at a particular pocket for long-term wealth creation at this juncture, anything that comes to your mind?
A few names which we recently came up with, in banking space, obviously everyone likes HDFC and ICICI. But from mid-cap space, we are witnessing IDFC First getting its act together. And we have seen that a lot of ratios have normalized over here. We are seeing that the credit offtake, the growth is, around 22-23%, which is not to be seen in many other banks. Valuations are also pretty attractive. So look, watch out for IDFC First. We have a buy call over there with around 20-22% upside target, 1 year target. We were talking about FMCG space. We have one mid cap or small cap stock called BKG, where my analyst is quite optimistic. As I mentioned, that some of the places where raw material prices have been on the downside, that has led to margin enhancement. So we have done some re-rating over there, and we have decent upside targets over there. One sector which I want to highlight over here is cement space. Nandita, there's a lot of capacity expansion which everyone has been talking about since last 1-2 years, and now some of that capacity has started coming into play. And cement companies, we have seen margins also, realizations also improving. Uh, some of the names which we are liking in cement space is Dalmia Bharat. My analyst recently came out with a initiating coverage over there. So there also we are quite optimistic. We are adopting very stock specific approach, Nandita, in this market rather than a sector, because within sector there are stocks which are doing great, there are stocks which are not doing so great. So that is what we would advise to your viewers also. Don't get excited because of some macro parameter. You have to deep
Sure.
dive into details of stocks.
All right, do your research thoroughly. That's the advice from Sid. But of course, those 2-3 stocks that Sid mentioned, that's the view from their brokerage. But with that said, we are running out of time. We'd like to thank you for taking out time and sharing your thoughts with us. Always a pleasure, and look forward to more interactions in the future. You have a great week, and it's a good weather in Mumbai today. Of course, have some hot tea or pakoras and have a good time. And hope to, in fact, we will be looking forward to more of that since the monsoons have started early here in India. I would like to thank you then, Sid, on that note. Would, appreciate more interactions in the future as well.
Always pleasure to be on your show. Thanks, Nandita.
Well, then, on that note, we've come. Sure, always. Okay, it's above, over 200 point up move on the index as we speak, 25,068. That's where the Nifty is at. Sensex up almost 750 points, mid-cap index up almost 1%. So yes, all round cheer. And we started the week on a good note. But mind you, we won't be having cues from Wall Street tomorrow morning. The US markets are shut on account of Memorial Day, and even there's a holiday in the UK markets as well today. But completely timed out on that note. Thanks a lot for tuning in. Keep your queries coming in. We will try and get them addressed on a daily basis as we always do. But for now, it's a goodbye. I'll see you at 3:30 p.m. at closing bell. Don't forget to tune in then. Have a great day.